How many of you know what the cash envelope system is? I know my grandparents used it to manage their money, but I would guess today that many don't even know what it is. And that's probably one reason why, as a nation, we have over $17 trillion in consumer debt. I'll be honest, I don't use physical cash very often. Most of my transactions are through a debit card. But unlike most people today, I don't have a credit card, either personally or for my business. You may be wondering, well, how's that even possible? Well, this is what we're going to talk about today. My name is Jacob Curtis. I'm a CPA, a certified Profit First professional, and a business coach. I started Curtis Accounting Solutions to remove the stress of doing the bookkeeping, payroll, and taxes off of quilt and craft shop owners and to provide practical business advice that helps them piece together financial freedom. I'd love to hear your thoughts and questions on today's episode, so please leave a comment below and remember to like, share, and subscribe. The basic envelope system. So we are on the same page. The cash envelope system is designed to help you not spend more than the amount of money you make. If you don't have the money, you don't spend it. So before debit cards, credit cards, and the internet became a thing, envelopes were used to help people track how much money they had to spend for their mortgage, to bills, for vacations, groceries, food, giving back to the community, and even an emergency fund. Each of these categories was represented by an envelope. So when you got paid, you cashed your check, brought it home, and distributed the cash amongst your envelopes. My grandparents used percentages to determine how much went into each envelope. They also knew that their income was not consistent paycheck after paycheck, and so compensated for this by making the percentages higher for things like the mortgage and bills. By having higher percentages for those important envelopes, they ensured that when their income was low, they still had enough from the good months to pay their bills. When things were tight, they had rice and beans, and when things were good, they ate meat and potatoes. Credit cards. Credit cards didn't even become a thing until the 60s and 70s, when over 100 million credit cards were mass-produced and mailed unsolicited to people that the banks had deemed credit-worthy. Today, we've racked up over $17 trillion in consumer debt in the United States, and this is what is crushing us. In Proverbs, we read that the borrower is slave to the lender, and we don't give sleep to our eyes or slumber to our eyelids, escape like a gazelle from a hunter, like a bird from a hunter's trap. In other words, we should do everything we can to escape our prisons of debt. Business application. So how does this all translate into business? When you first started your business, you probably got a loan and opened a checking account. And since that day, you've been using that single account to run your business. All of the transactions came in and out of that business account: payroll, rent, utilities, debt payments, credit card payments, everything. And because everything goes through your single bank account, it's hard to keep track of what money you owe to whom and where it all goes each month. So you probably use spreadsheets or QuickBooks or some other means to help you manage your money, or at least hopefully. We did this at Utah Valley Quilting for a year, but when we realized we were not making any progress towards getting out of the debt by following the advice of the traditional finance and accounting experts, we knew we needed to make a change. That change involved using a cash management system, specifically the Profit First system. Profit First is the cash envelope system for business. It's been adapted and modernized a little. Instead of envelopes and physical cash, we use checking accounts and debit cards. The foundational accounts. The 6 foundational accounts I recommend for any business selling a physical product, including quilt and craft shops, are the income, inventory, profit, owner's compensation, tax, and operating expenses accounts. The purpose of the income accounts is to collect all the sales money coming into the store and act as a serving tray to the other accounts. The inventory account is to save and buy inventory for the store. This account should be a factor in your open to buy process. The profit account has 3 purposes. 1, to serve as an emergency fund for the business. 2, to pay off debt and make extra debt payments. And 3, to reward the business owners for their hard work each quarter, kind of like a quarterly bonus. The owner's compensation account is to compensate the owners regularly, providing for their stability in their personal lives. The purpose of the tax account is to save and pay for the owner's annual business and personal income taxes. It's not for any other type of taxes. The operating expenses account pays for everything else that was not specifically mentioned before, like rents, payroll, sales tax, utilities, you name it. How to choose a bank. In future videos and blogs, we'll talk more about the mechanics of using Profit First on a daily basis, but today I'll end with just a few thoughts on picking a bank for your accounts. If you can avoid it, you want to pick a bank that does not have a minimum balance requirement and does not charge a monthly fee. Many of the big national banks do not meet these simple requirements. I recommend looking for smaller local credit unions and banks to help you set up your accounts, or use the official banking platform of Profit First, Relay Financial. In March 2023, Profit First Professionals, the organization founded by Mike Michalowicz, the author of Profit First, which certifies Profit First professionals like myself, announced that Relay is the official banking platform of Profit First. So click the link below to open your accounts today. Next steps, open your accounts today. You need to have 6 checking accounts and nickname them as follows: income, inventory, profit, owner's comp, tax, and operating expenses. Pro tip, if you're sticking with your current bank, I recommend that you use your old original checking account as your operating expenses account. Another tip, you want all 6 of these accounts to be checking accounts and at the same bank. If they're savings accounts or there are different banks, the system can be very difficult to use. Keep all of these accounts as checking accounts at the same bank. Tell me in the comments below or email me at Jacob@CurtisAccounting when you have opened your accounts. If you need help with this and piecing together financial freedom in your shop, please schedule a call with me by clicking the link below. Remember to follow me at Curtis Accounting Solutions on Facebook, Instagram, Pinterest, and YouTube. Thanks for watching, and talk to you soon.